Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, as well as our co-host, Skyline Corporate Communications, we're very pleased you joined us for our next live presentation from TRAWell Co. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in scheduling a meeting with TraWell Co., please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Eduardo Zargata, Investor Relations, TraWell Co., which trades on the OTCQX Best Market under the symbol TRWAF and on the Euronext Growth Milan market under the symbol TWL. Welcome, Eduardo.
Hi, Bob. Hi, everyone. Thank you for hosting me, and thank you for listening to this presentation. We're going to talk a little bit about TraWell. TraWell is a provider of protection services, baggage storage, sale of travel accessories inside airports, and sells this lost luggage concierge service, which is a value-added service that takes care should your luggage not arrive at your destination or should it be delayed. That's a service we market for another company called SOStravel.com that has been presenting about an hour ago here. So we have as a presentation the 2027 business plan. It's not the most up-to-date document because an update of this document is due in about a month, but because of market rules, we cannot really change it too much before we present it to all investors worldwide. So let's use this presentation as a way to get to know TraWell a little bit more. It's divided into two parts. Is how we operate, what we want to do, and then there is a part with the financials, which I'm sure are the part that everyone is interested in. This picture gives you an idea of where we want to be in 2027 in terms of store. As I said, we are a company inside airports. We provide baggage protection services by means of wrapping the luggage. We add to it this lost luggage concierge that is an online service that you activate when you go, and in case your luggage doesn't arrive, you get assistance and payment from us if we don't recover it speedily. And then at the airport, we also sell some travel accessories, more like mainly electronics and stuff related to luggage. If you need another luggage, a bigger luggage, a belt, and all that sort of things you need when you travel. That's where we operate. This is our market, our positioning. So we are lucky to be in a really fast-growing market, and that's the as you can see from the air passengers numbers, they are growing. People want to travel. There's new services everywhere in the world, so the numbers are very supportive. Within that number, people tend to spend more and more money when in retail services when they travel, and as you might have seen from all the different offerings that you can find in the airport, which is basically a huge, a shopping mall. That's what it has become. And within that shopping mall, TraWell, it's involved with the service part, not with the products, but with the service. And this is really like a value added for the investor because this part is the part that is growing the most, the services, and it's the one with the best margins. So we call ourselves a diversified retail service group. The bread and butter of our revenues and EBITDA comes from wrapping the luggage and protecting the luggage and help you weighing the luggage, making sure you don't incur into any extra fees. We also own a participation in the digital tech, travel tech company called SOS Travel. And then we started to operate different stores and different concepts inside the airport, leveraging on the experience we have on having so many personnel and staff inside airports and dealing with the airport concessions. So we do also all these other services. They have not been growing as fast as we wanted in terms of revenue and EBITDA contribution due to COVID, because we launched this strategy of diversification away from baggage protection in 2019, just as COVID struck. This is an example of value-added services that we provide and new businesses that we are adding to our offering. One is the post-pandemic, the airports realized that they need to operate a little bit more, they need to be more equipped in terms of medical assistance. They cannot just have the small kiosk in the car park like I found where they test you for COVID. They need to have a little bit more space that is dedicated to everything medical. And so they're going out tendering, and they've asked us to join the standard process to provide outpatient clinics, test center, and analysis laboratories. So this is a small project that we have. It's not in the numbers, but it's just to show you that we are proactively growing our business within airports. And the other one is the service provided by SOS Travel, which we sell inside the airports, and it's a telehealth service designed for passengers to get protection, to get assistance, to get a doctor in their language 24/7 when they travel. This is our presence in the world. The numbers here have gone up since October. The updated numbers, I'm going to read them for you now. We have 125 stores in 38 airports in 13 countries. So we have grown since October because we got some big airports coming into our portfolio. As you might have guessed by now, we are a concession business. So we win a concession for some years inside the airport, and then we sell our services to the passengers. So it is important to have long concession terms. And we're lucky enough to have the majority, the 67% of our revenues come from airports that have a concession terms longer than 4.4 years. I can see there is a question on this slide. So if anyone has questions regarding these technicalities on how we operate inside airports, please just put them into the chat and we will answer them after the presentation. So the biggest contributors to our P&L, as you can see, they have a very long term of contract. This is very good for you when you buy our company as an investor. You have predictability of cash flow, predictability of results. It's not like the up and downs on having to sell products every year like a lot of other industries and services. This slide is here for you to see that we are the leading company in this service. It's a small niche, but we lead it. We have the highest percentage of baggage wrapped worldwide compared to our competitors. This is how we intend to grow. When it is in Europe and North America, where we already have a strong presence, we like to go directly with the companies that we already have, with the company that we participate, that we have set up and that we are part of our group. Should we move into areas where we are a little bit more careful, we'd like to go with partners in the form of joint venture franchising rather than investing directly into opening our own companies. This explains a little bit more in detail. I think you should look at this in the presentation without spending too much time now. It really gives you the cutoff of where we move from one type of strategy to the other in our growth strategies. This is the most important chart of the day, is the 4 pillars of our growth. This is what we intend to do to be in a fantastic shape in 2027, and that is to bid for new space and get new concession where possible and confirm the existing concessions in order to grow our EBITDA. We want to improve our point of sales, our shop. We want to get to a better shop. We have a plan to refurbish the shop so that we can grow our revenues by selling more products to the same travelers. We want to expand our digital services portfolio so that there will be a positive impact on the net results. This is the nature online business. And then we really want to reward shareholders for putting up with all the high and lows that we had during the COVID, and therefore we have plans to improve the liquidity. One of them was starting to trade on the OTC and realign our company to the sector multiples, where at the moment we are a little bit behind. This is what we have included in 2027 plan. So it's the digital lost luggage concierge and the current services that we already offer. And we are not putting into this current plan the new services, which is the doctor travel. So the telehealth service is not in this plan, and the operation of medical areas inside airport is not inside this plan. They might come in future updates when we really know what we are going to make in terms of money. These are the assumptions for our numbers. I should make an impression of the CFO's voice here. This is the CFO telling you that we're only looking at the current airports that we have. We haven't, planned to get any concessions, just renewals. We have tweaked price starting from 2024 to cover for current inflation, and we have accounted for a capex program that allows us to improve and refurbish our concession space, which is something that we really care about. So this is what should happen to our numbers. The 2022, 21 million of revenues versus 31 million in 2027. These are all euros. So at the moment, there is 8% more in dollars. As you can see, the EBITDA margin is behaving quite well. It stays, around 20%, growing 10% between 22 and 27. We really like our EBIT and our net result. The net result for 2022 was already very strong in the 6 months to June 2022. We had 2.2 million of net result in the bank for the first 6 months. The company will have all these numbers for 2022 audited and presented to the shareholders by May 2023. So this is what's happening. We expect to have a net financial position, a positive financial position by the end of 2025. The reason why we have this plan of reducing the debt during the next 4 years is due to the fact that we had to accumulate a little bit of debt during COVID in order to stay competitive, to keep relationship, to keep concession going, and to remain the leader of this market. This compares the revenues and the EBITDA with the projection of the traffic, just so that you feel comfortable that we're not projecting to grow too aggressively, but we are actually below trend for growth of EBITDA compared to the growth of the passengers numbers as they are expressed by the Airport Council International. And I want to thank the people who are putting the questions in the chat. We're going to answer them in a couple of minutes when we are over with the presentation. So the numbers are quite conservative. After this plan that, as I said, was issued in 2023, we already won 3 more airports, one of which is extremely big, is the Milan Malpensa Airport, is among the 10 biggest airports in the world for travel protection services. We think it's going to add quite a few million of euros to our revenues and contribute massively to our EBITDA. You will be able to see an update of our plan in about a month from now. So drop us your email. Make sure you are in the investor relation mailing list so that you will get the updated plan in your email. Here we want to stress again the fact that we're really taking care of our shareholders. We have increased our listing from the Euronext growth. We added the OTC market, and in terms of research, we are partnering already with the largest bank in Italy called Banca Intesa, who publish research in English, and we will have hopefully a mid-tier US investment bank who will cover us from the end of this year. If you want to recommend anyone please reach out to me. There will be more information to share with the investors, and the liquidity of the shares will increase. The liquidity of the share in Milan has already increased dramatically from these levels. As you can see, when we did this plan, we were trading at around 5 euros. We are currently trading at 7.8 euros. So we already had 50% rally, but we don't think that this is, that we are done at all. This is how we expect our price to perform. In the top table, you see where if we maintain our current market capitalization EBIT multiple of 5.8, and we just drag on Excel the increase in EBIT as per plan, our share price should move from the 7.8 euros of today to 16 euros of 2027. What we've done underneath, we looked at the comparables for our company. There are big conglomerates such as Dufry and Lagardère and WH Smith, Swiss, French, and English company. All the American companies are private, unfortunately, so I couldn't put one there. They have a combined 16.8 multiple for current market versus EBIT. So if we just took an increase of multiple to 12.4, that's what should happen to our share price. Of course, this is stuff that investor relator like to think of all day long, see the share price going up, but we have proven since October a strong performance already from 5 to euros. And with the addition of the US investors, we think we're going to increase liquidity, and we think we're going to have a very tonic share price. So we hope you jump on board as soon as possible. This is very much what I had to tell you. Maybe just one more slide, sorry. This is to tell you that the company has 25 years of history. We're not brand new. We know what we're doing. This is the share price, how it has moved during the years. As you can see, we got to a very high share price after we posted 4.6 million of EBITDA result in 2016. We are very close to those numbers again. So we are potentially on the verge of an explosion for our share price should this phenomena be repeated. Of course, interest rates are a little bit higher now than they were in 16, so we might not get the full blast that we got back then, but we are definitely on the rise, because the EBITDA that we will announce in May is massive compared to the previous years. You can also see from this chart that this company likes to pay dividends, so become a shareholder as soon as possible, because here we have 3 payment dates for dividends that we have done. We've given away some shares of SOS Travel in the past to our shareholders. We have a warrant out with a strike price of 8 euros, so we're very close to strike price. And so I think we are a very good proposal for investors who want to join the growth of the travel industry as a whole, and want to benefit from the fact that passengers spend more and more money when they travel inside an airport, and so that they can take care of themselves and have a good trip. I will end my blurb now. Thank you very much for listening to the blurb. I will go to the questions. I'll start with the first one. First question is, what are the synergies between TRWL and SOS Travel? So SOS Travel is a factory of online products. It's a company with digital online marketing experience in the travel business. So they develop online products. We have 128 stores worldwide in the airports. We are one of the few stores that is there where in the check-in areas of the major airports in the world. So we sell their products in the airport, and we take a commission for that. So they make the product. We are the sales network. Second question, what is the connection with SOS Travel business-wise and common ownership? I think I answered that. SOS Travel, we own a participation, is a minor participation in the company. It has been dropping over time because of the merger that there has been inside SOS Travel. You can look at their business travel plan, or you can reach out to me. I will explain in a different place. But yeah, so we have a minority shareholding inside SOS Travel, and we cooperate very strongly. They do online services. We do kind of more of a brick and mortar type of business. Do you expect to see M&A consolidation in the stream industry? What role will travel play? Yes, I think that at the moment the warrant goes into in the money, we will start to see conversion of the warrant into shares of the company. That equates to a capital increase. According to how much money comes into the company, we will go out there and we will buy the competitors that we think are most fit to our strategy and mission. We've been in this business for 25 years, so we're not going to go and buy every man and his dog. We're going to be very selective. I cannot also exclude that the company will do M&A over and above the luggage protection services. As we saw in chart number 1, we have a strategy to grow inside airports, also into other services. So we really want to grow 360 degrees, not just into baggage protection. So if you buy the warrant, convert it, we get the money, we're going to go out there and grow the business. What are the main competitors and how did you differentiate yourself? So first, the comparison is that none of our competitor is listed. We are the only listed company. We're the only company that operates in such a global scale. The airport really like that. They start to give points when they tender out their areas to the fact that they need quality. They need people who can pay their invoices, that people who can staff their sales point 365 days a year, that are professional, that train staff, that speak languages, and also that have or can offer a network effect. It's nice for an airport in Frankfurt to know that the passenger can be served by the same company in Auckland or in Miami or in Toronto. So I think we are the ones with the biggest network effect. We are the only ones with the who have securities on the market listed on 2 stock exchange plus the warrant. And so that also gives us a little bit more of financial strength and financial clout. Target acquisitions will come later in the year. We are looking at competitors in the baggage protection and beyond that. Currency price is €7, not 7.8. Thank you very much. I meant to say 7.08, which is the number I read on the Milan Stock Exchange. Good point there. 2023 milestones are, according to the plan, what we want to do. The first milestone is to review the plan. We've added quite a few millions of revenues inside the plan already in the tail end, late doors of 2022. So when you will see that plan, you will see that we are already around 2025 compared to the results that we had projected in 22. So once we've done that, we can really start to disclose a little bit more, information on what we need to do in order to grow beyond what's contained into this plan. So the milestone for this year will be announced after this major update for the business plan that we're working on with our CFO. The synergies, I think I answered. I think these were the questions really. I just want to use maybe one more minute to say that this is a good year for international investors to look at small cap stocks in Italy. In the last 20 years, the companies in the small cap segment have returned 650% over 20 years. That's over 30% a year. We only had 5 years down over 20 years. And every time there has been a year down, it has been followed by a massive rally. This is because the small cap companies really are the fabric of the Italian economy, what we call the made in Italy. They are good companies with, like in our case, with low debt, a very good cash flow generation capability. So every time there is a little bit of a sell-off due to the international environment or fears of recession, in our case in Italy, the price of gas, depending on gas from abroad, So the tone of the market has been a bit negative in 2022. We really think 2023 is the year to get involved in small cap Italian stocks. Within this market, the travel sector is particularly strong and is looking good because people want to travel and they want to enjoy themselves. And within that sector, TRWL offers very low multiples and therefore is a cheap stock to gain exposure to the growth of the travel sector as a whole and travel retail services. I'll stop it here. If you have any questions, our email is investor.relator@trawlco.com. And I'm sure the OTC has all our contacts as well. And in the OTC page, you will find all our press releases, our presentations, and yeah, let's stay in touch. I hope to see you on the Capital